Dividend investing can be done in all shapes and sizes, and there truly isn't a one-size-fits-all strategy. But at the same time, there are certain goals that virtually all dividend investors can agree on. One of the certain goals that we dividend investors can agree on is to try to build our portfolios with enough quarterly and or monthly paying dividend stocks in order to reach certain milestones, like for example, get to a $100 per month paid in the form of dividends average. Now, in order to build up a portfolio to a size where it's paying you around $100 per month, many investors might think that their portfolio is much too small and that they won't be able to stretch their buying power far enough. And while this might partially be true if the dividend investor is choosing to buy an ETF like SCHD, for example, with a trailing 12-month dividend yield of 3.42%, I absolutely adore this ETF. But I will say with a smaller portfolio and with limited buying power, the investor would need to buy a lot of shares of this ETF in order to achieve a $100 average per month dividend payouts. And just for fun, let's see how many shares of SCHD an investor would need to purchase to average around $100 per month in dividends. SCHD pays out around 70 cents per quarter. So what we would do is we would divide 70 cents by 3, which would give us around 23 cents or so per share, then divide 100 by 23 cents, which would give us a grand total of around 435 shares of SCHD, which is how many shares we would need to purchase if we wanted to average around $100 per month from just SCHD. Now, 434 shares of SCHD at an average cost right now of around $75 per share, we're looking at a $32,608 investment to get to that awesome milestone of $100 per month paid out in dividends. But wait just 1 minute, before you say I don't have $32,000 of buying power. I would love to have enough SCHD to pay me around $100 a month in dividends, but it's just not going to happen with my buying power. We're going to dig into a different strategy, a higher yielding ETF and stock strategy, a road that many investors choose to go down. Now, I'm not making this video to say that this is a better strategy or a worse strategy. In my opinion, I think that blending multiple strategies and having a diversified investment strategy is the best strategy. But let's look at some higher yielding ETFs that actually have a pretty safe and consistent payout history and see how much buying power we would need to spend to reach that $100 per month milestone. Now, high-yielding dividend ETFs are attractive to many investors because they offer the potential for much higher income in the form of dividends, which is appealing to investors because you don't have to spend as much money. You don't have to invest as much into these ETFs in order to see a significant return paid out to your portfolio on a monthly basis. Investors who are looking for income-producing investments might be drawn to this because of the consistent, steady stream of income that can help cover expenses. Like, for example, a lot of you guys probably want to get to a certain amount of paid dividend income on a monthly basis to maybe cover your cell phone bill or maybe to cover your car insurance. And I was there at one point too. Now I'm at a point where my dividends cover my entire lifestyle. But I remember not all that long ago thinking to myself that my dividends now cover my entire car insurance. My dividends now pay for my electricity bill, etc., etc. One of the obvious options if you're looking for a higher income producing ETF is of course JEPI, JP Morgan's Equity Premium ETF. Now, I went over JEPI in the past, and I've even made videos about JEPI, so make sure to check those out. But JEPI's trailing 12-month dividend yield is 11.93%, which is almost 4 times the monthly average payout compared to something like SCHD. Now, if we were to divide $100 by JEPI's monthly payout of around 44 cents right now, we would only need 227 shares of JEPI to achieve the goal of $100 per month in dividends. With JEPI's share price of right around $54 per share right now, you would only need to invest around $12,288 to get to that $100 on average per month goal of dividend income, or more or less 3 times less money than SCHD. Now, not so fast. Before you say, well, why wouldn't anyone just put their money to JEPI over something like SCHD if it pays you so much more per year and you have to invest so much less money to get there? Well, if you look at the total return here, which equals the price return of the share and the dividend, SCHD over the last 5 years has returned a total of 74.82%, where JEPI's only returned 39.15%. So, although it takes around 1/3 the amount of money to achieve the same goal, if you look at JEPI and SCHD, for example, there is a chance in the long run you're going to pay the price for that. And over the last 5 years, investors have paid that price. JEPI has not returned the same amount as SCHD if you zoom out and look at them over the last years. This next higher yielding ETF is going to make things a little bit crazier. SVOL is a simplified volatility premium ETF, and I will be going over this ETF in the future, so make sure you subscribe for that. But this ETF, trailing 12 months, pays out around 17.91% yield, which dwarfs even a high yielder like JEPI. This fund pays out around 32 cents per share per month and only costs around $22 per share. What's even more crazy is to get to that $100 per month goal, paid out in dividends, you would only need to buy 312 shares of SVOL. And again, these are all in theory if things don't change, if dividends aren't cut, etc., etc. So this is just an example. SVOL at $22 per share times 312.5 shares means you will need to invest only $6,875 to get to that $100 a month goal of dividend income. But as anything in life, everything comes with a price. If you look at the total return of SVOL versus SCHD versus JEPI, SVOL total return over the past 3 years, 12.19%, SCHD 59.18%, and JEPI 39.06%. So I want to reiterate the fact that even though certain ETFs are high yielding, and even if these ETFs do have a long track record of paying out their dividends, which is of course good to see, it doesn't necessarily mean that it's a good investment vehicle for everyone. But it does in fact mean that you will most likely need to spend much less money to get to that beloved goal of $100 per month paid out in dividends. If this video was interesting to you at all, and if you liked it, make sure to please drop a like in this video and subscribe for more content like this. Thanks again for stopping by, and I'll see you in the next one.